Today we're going full crazy and creating a 5-stock portfolio using this. Abhishek has been obsessed with this book right here and this line that says, monkeys can create a stock portfolio and beat fund managers. Now, is that even possible? What do you think? I don't know. Let's find out. Okay guys, hold up. Before we begin, this game's pretty simple. We have 2 contestants and we have this really sharp arrow. We're going to shoot and whatever stock we touch will be part of your portfolio. We have 2 guys from the office. We have Vasu and we have Abhishek. And the winner of this game is going to get this farmhouse to party tonight. So let the games begin. Guys, before you start, Vasu, what's your strategy?
Sir, I don't have any strategy. Nifty 50 hai na? I'm aiming for index fund.
Why index fund?
Index will outperform everything best hai.
Interesting. एक बार उसको भेजिए. Abhishek, इधर आना. What's your strategy here? Which stock?
Sir, I really don't care what my arrow hits.
Okay.
Right. I have read this research, this
Right.
book by Burton.
Yeah.
Now, if monkeys could do it,
Yeah.
why can't I?
So you think you'll win?
Of course. So don't worry, I'll just rent the property to him. You get the paperwork done.
Well, you gonna buy this place?
What?
Overconfidence. Okay, guys, let's go. Who do you think is gonna win, man?
I think they're entertaining Abhishek a little too much. He's not gonna win.
The arrows are not even hitting the board, guys. I mean, ऐसे नहीं बनने वाला portfolio.
Who won?
I did, of course.
Where do I have to sign to buy this?
देखो इतना overconfidence से कुछ नहीं होगा. This is not how it works. We will take all your stocks, make a portfolio, back test, see after all the results who won, which companies died, which companies didn't. So let's do the audit. अभी के लिए pack up. Let's go.
Okay.
Welcome to their portfolio audit. So we have portfolio 1 and portfolio 2. Oh, sorry, portfolio 1 and portfolio 2. We can see portfolio 1 has made a 4.5% CAGR. Very nice. Clapping.
Bus 4%.
CAGR.
Okay.
It's not bad.
Only 4, yeah.
And you have done minus 0.5%.
Wait, what?
Around, you've lost about 0.5% every year. Okay. So let's go through this. Okay. Now I want you to see this. Look at some of the stock CAGRs over here. Let's start with you.
Okay.
So here we can see one company has done almost minus 10%. Another has done almost minus 14.5%. And this is CAGR, right? That's the stocks haven't moved at all. And they're giving a negative return. This is really unfortunate. Do you notice something about this company?
It took a reverse gear.
This company doesn't exist anymore. That's it. And I'll explain what this is. And for you over here, we have all these large cap companies sort of, yeah. One of them hasn't done well at all. You know what company this is. And the others actually gave a decently positive return. And you ended up with almost 4.5% CAGR. Not bad. I want to ask you some question. I have a list of stocks over here. Can you see this list of stocks over here?
Yeah.
Now these are stocks from around 2010. Have you heard of this stock?
No.
And Vasu, have you seen this stock?
No.
And what about this one?
No.
And have you seen this one?
No.
Okay, these were really famous stocks a long time ago. And if we traveled back in time and you were there, in sabka news baar aata tha and everyone said, dude, these are the hot stocks of the day. And you know, retailers would be like, yaar, ye bade achhe companies hai. So, you know what this is called? Survivorship bias.
Oh.
You will never see this list in 2023 because you look at Nifty 50, usme nahi honge. Nifty 100, they will not be there. Hot stocks, they will not be there. Volume gainers, they will not. Any list you look at, these stocks will not be there. You know why? Because you know the answer.
Survivorship biased.
They've not survived. They died. So if you look at the best performing stocks in 2023 and then backtest them, रिजल्ट तो अच्छा ही होगा ना.
Well, yes.
Right? In your list, those stocks which died don't exist.
Correct.
So that bias is there.
Right.
So I sneakily put a bunch of stocks over there which actually don't exist today, and that's why your portfolio does this, because there is, survivorship. It's because it's real. Because it's real.
And I just hit particularly those.
And you hit it. So there's some probability playing over here.
Good surprise. Okay, perfect. So that means if I make a portfolio in 2023,
Right.
some of those stocks will actually not survive probably, let's say, 10 years from now. Is that what you're saying?
What do you think?
Yeah, I think that would happen.
Correct. So there's nothing you can do about it. We can't predict it. The only way is diversify. And some of those stocks will go to zero or not move at all, and that's completely fine.
And this must also happen with the big investors and fund managers.
100%. Actually, if you look at all the large investors, they all sort of diversify their investments. But if you look at the successful ones, they will have a large holding in some companies. Warren Buffett ka ye companies like Coke, etc. For Rakesh Jhunjhunwala, we can see Titan. So just like some will die, some will completely outperform, and that's the way the market works.
Nobody knows what's gonna happen.
Yeah.
Yes, I think one of my losing companies was held by Mr. Jhunjhunwala as well.
Perfect. So this is called survivorship bias. When you are backtesting something in 2023, you may only look at the successful companies, because the companies that died, you will not find the list anywhere. So your list itself is biased. Your backtest is biased, and there is survivorship bias in that list. The reason why both these portfolios didn't perform extremely well is because some of the stocks which did not survive were included in that board over there, and we learned how survivorship bias works. Nice, learned something. Very nice, very nice. Put it in the comments if you didn't know this. The second thing I want to tell you.
So I've read that book by Burton.
Yeah.
Tell me about that research. I mean, did I do anything wrong?
So I think you're comparing the research you read and you've been talking about so long versus what just happened.
Correct.
So in the book, we had the research done, and the research is documented and proven that 1,000 companies may say, these monkeys selected 30 companies. And that portfolio actually beat all the fund managers. This is the story. So it feels like if you randomly pick 30 stocks, you can beat the market or beat fund managers, correct?
But I didn't win.
And you thought you randomly picked those companies? Correct. So I think these are two different situations. In the monkey situation, those were 1,000 companies. The second thing is, in those 1,000 companies, there'll be some micro cap companies, maybe trading for a couple of cents, couple of paisa equivalent to us, which go to thousands or tens of thousands of rupees. I'm actually saying dollars. And that return could be so high that it will skew the portfolio. So my question to you guys is this: if your life saving is X and you have to put it in this unknown company, jiska market cap 100 crores hai,
No.
would you be able to do it?
No.
Just because you read a book? No, right? So maybe that's why the monkeys won. But that doesn't mean you should pick stocks at random. So you're done?
Yeah.
Perfect. The second thing I was going to tell you, forget about your returns, lousy returns. 0.5% CAGR minus,
I don't remember.
plus 4.5% plus. Think about Nifty. Nifty is the index. The Nifty has given 13% CAGR.
हाँ, मैंने तो पहले बोला था.
I know, but play the game. So Nifty
Focus.
beat you a lot. And all you had to do was just hold on to, and Nifty 50, Nifty 100, both have given roughly the same CAGR. But I think by doing this, you understood that unless you really want to learn to pick stocks and become a Peter Lynch or any of these people and actually beat the market, which is possible, by the way, but requires you to study and learn a lot, the simplest thing for a retail investor to do is this: just buy an index fund and hold it for a long period of time. The power over here is time, if you hold it for a long period of time. And the best would be like a sip every month for a long period of time. So when you pick an index fund, your survivorship bias is actually taken care of.
Oh.
Tell me how?
There won't be any companies that die off probably in Nifty 50. Top 50.
Does that mean top 50 companies don't die?
Maybe.
They do, but they might get thrown out of Nifty 50, right?
Exactly. You know how the calculation happens, right?
Yeah.
How?
बताओ.
नहीं सच में नहीं पता क्या?
नहीं.
सच में नहीं पता? So imagine the top 50 companies by market cap is Nifty 50. which means if some company's market cap reduces, the 51st company becomes 50th and this gets thrown out.
This gets like 51
It's not a Nifty 50 anymore. So it
correct.
keeps replacing, it keeps changing.
as per the market cap.
So the survivorship bias is taken care of. It's like a algo, right?
So we'll always be holding top 50 companies.
Yes.
Whatever.
No
they
matter
are.
who they are. So that's one advantage. There's an algo inside it. You've not picked a set of 50 stocks. The set of 50 stocks keeps evolving. So my point is very simple. If you don't want to put the effort to research, find a stock, balance, exit, etc., and don't have the time to do it, simply buy an index fund. If you do have the time to research and build, like Vasu does over here, I know you like picking stocks, and so do I. You can create your own portfolio, but you'll have to have a little bit of obsession because you have to figure things out. Tell me, what kind of person are you? Are you an Abhishek who still doesn't know what to do? Are you a Vasu who will only invest in index fund? Or are you a Pratik who will pick your own stocks and create your own portfolio? Put it in the comments. Say something like that.
सर इंडेक्स मंकी वगैरह तो ठीक है ये पता पार्टी कब कर रहे हैं
See, I didn't get the farmhouse, but you should subscribe right now.
वंदित हमको क्यों दे दो कब कब पैसा
Okay. इन लोग को बोन एरो नहीं आता, हम पोर्टफोलियो कैसे बनाएंगे? ब्रो क्लोज अप लेना था ना.